Hi everyone, we're talking about Draftkings and Airbnb. They reported earnings last week. Welcome to YCG, where we help your capital grow so you can achieve your financial goals. If that's something that interests you, then hit that subscribe button and the bell notification so that you don't miss a thing. My name is Will Kruger and I'm joined by Brian Yacktman and Elliott Savage. Welcome, guys.
Hey, how's it going?
Great. So Draftkings and Airbnb reported. Both are very high growth companies, and not all growth is profitable growth. And obviously here at YCG, we strive to identify and invest in businesses with enduring pricing power and long-term volume growth opportunities. And one thing that we look at as well is network effects, and preferably that these networks are global in nature. And also in industries that are growing at least as fast as GDP. So looking through this lens, what can you guys tell us about these two companies?
Yeah, so I think the first thing that jumps out at us is that the businesses both definitely operate based on network effects. And one of them is very clearly global. So if you look at Airbnb, it's this global network of, basically a marketplace where people list their houses and then other people, go and rent them. And so it's very clearly this global network effect that we love. And it really created a whole new category. And after it created this category, there were some sort of negative externalities that occurred, but the regulations were too late. It became global. If you look at DraftKings, it's also a network effect. But it's a little different because people are aware of the negative externalities of online gambling. So even though it's created this new market that does have this huge growth potential, it's going to take them a lot longer to become global because it's a much more highly regulated industry. And so right now, they're in 12 states representing 25% of the total U.S. population. But hopefully over time, they've got a big lead and they could become maybe a national and then maybe global network.
And I'd just add with DraftKings, it's more like an exchange-based liquidity network. It's much like the exchanges that trade securities. So it's like that network effect that happens at the exchanges. But the thing is that once it's sufficiently large, there's not that much value added with each additional user added to the network. As Elliott said right now, there is a kind of a question of the size. It could become massive with DraftKings, but there's also a lot of local regulations that can slow it down from becoming as large as maybe it's dreamed and hoped to be. So it's uncertain, but it could become massive. But there is something also going for DraftKings, which is that it's a social component. As you can communicate with users within there. And that social component somewhat reminds me of Facebook. All the dopamine hits that you get that drives people to keep coming back to the network. So there's definitely some promising things with both networks.
So it sounds like both have network effects. Sounds like Airbnb's superior with regards to that, and especially being a global network. Okay, so another thing that we like to look at is how much does it cost to add new users? And what do you see with both of these companies with regards to that?
Yeah, so when you think about it, there are really kind of two big costs involved in growing a network. And number one is sort of the human and physical costs associated with actually adding the person to the network and also with selling them an additional unit. And then there's the sales and marketing costs, which are necessary to attract them to the network. And fortunately for both of these businesses, actually, the human and physical capital costs, which will always be with you, are very small and are mainly technological. And so that means that maybe at maturity, they can be very profitable because the sales and marketing costs are high right now, but they're always high in the early stages when new networks are trying to grow their users. But we think that they can decline significantly as the networks gain mindshare.
Yeah, speaking on that, for example, in the last earnings conference call, Airbnb's CEO, Brian Chesky, he mentioned that they had pulled back their marketing in 2020 because of COVID, just feeling, it'd be a waste, of course, during that time to be marketing when no one's going to be using the platform. But then he said that something really remarkable happened. He said, even before we started resuming our marketing spend, our traffic levels came back to 95% of the traffic levels of 2019 without any marketing spend. And so that shows you, their brand's just inherently strong. That tells you what a strong, he mentioned it becoming more like a noun and a verb in pop culture. That's inherently a much stronger network at this time. In fact, he said that last quarter, 90% of their traffic was direct or unpaid. So it sounds like he mentioned that they don't plan to spend nearly as much on marketing going forward in the future as a percentage of sales. Now, having said that, they're hoping to catch the recovery right now. And so they significantly upped their marketing spend this past quarter. But just to give you an idea, Airbnb, they've historically spent about 1/3 of their marketing expenses as a percentage of sales. So they spent about $1.62 billion in 2019, $1.175 billion last year. And when you compare that, look at DraftKings, they needed to spend nearly $500 million on marketing in 2020, which is almost 80% of their revenues. So you think about what that means. Every dollar of revenue that you spend, that you receive, you're spending 80 cents on marketing, which obviously right now doesn't leave much room to turn a profit after all of your other expenses. And so, of course, they ended up losing about almost $850 million on the year. Now, as I say all that, I'm not trying to be critical because they got to be doing the right thing. They're putting the pedal to the metal to try and get a land grab for as many users as possible to create the largest online game betting operator in the US. Because it's most likely a winner takes most, if not winners take all kind of platforms. So
right.
They're going to spend a ton right now. And that number, will eventually come down. In fact, it was 60% of revenue this last quarter. And so the hope would be that eventually after all of this spend, someday they're able to bring it significantly down. And then much like Airbnb's doing, not even have to worry about the spend because the users naturally come to the platform because it's the network where all that gambling is taking place. And I just point out to try to create loyalty, DraftKings. So whenever people are placing bets and all this money is being gambled, they take 10% off the top. Some of that's given back as a bonus to try and retain loyalty to their network. It reminds me a little bit of like MasterCard and Visa and all their rewards programs with their two-sided network effect all across the globe. And then you're getting, 1-2% back in cash or rewards, loyalty points, et cetera. Makes it so that you're less likely to try to switch to maybe some other payment system. So anyway, they're doing the right things, and it could turn into a great network effect.
Yeah, this is great information. And for our viewers, if you're finding this information helpful, give us a like. It definitely helps with our YouTube algorithm. Let's talk about the industries then. What do you see about the industries that these two companies operate in?
Yeah, well, as you alluded to earlier, Will, we really are looking. Enduring pricing power comes from having this big network, and then also from having an industry that will grow at least as fast as GDP over time, because that just gives a long runway for that pricing power to continue to run. And so as we look at both of these, we think they operate in very attractive markets with Airbnb in travel and also DraftKings in entertainment. Both of those we think will just become more important to society over time, and we think they'll grow at least as fast, if not faster, than GDP over time. And then additionally, both of them have these disruptive, innovative models that are both expanding the market, so expanding the potential opportunities to sell goods and services to people in these categories, and they're also taking market share from some of the existing offline competitors. And so we think it's very favorable.
Yeah. And as you say, Elliott, as wealth goes up in the world, both industries should likely maintain their share of GDP and then have excess capital or excess revenue cash to be able to put towards these industries. But I would point out the difference that DraftKings right now has a huge tailwind behind it. Airbnb has had a headwind, and whether or not there's going to be a recovery there is still to be determined. But if there is a recovery, which would obviously benefit Airbnb, I guess the question is what's going to happen with DraftKings, because right now it's a new industry with a lot of growth behind it, and they raised their 2021 revenue outlook on this last earnings call because people are staying home. They're not going to the ballparks and the stadiums. But there's still a long ways to go with legalization. Right now, as we've already mentioned, only 25% of the U.S. population have legalized sports betting and 10% of the population on iGaming. So it's likely that will expand and grow. But I'm also would say, on the other hand, a little worried that in the short run, there could be a slowdown. A slowdown as things recover and people start to bet less online potentially and return to more actual social forums of betting or going back to casinos and stadiums, et cetera. And there's also no guarantee that the legalization will happen in all of the new states. It's looking promising, but no guarantee.
So what about valuation? As the saying goes, price is what you pay, value is what you get. Let's talk about valuation for both of these companies.
Yeah, so I think valuation, there are kind of two things you want to think about. You want to think about the actual numbers, but I think it's also helpful to look at just sort of the market environment you're in, because since valuation is it's a mix of art and science. And on the art part, we would just note that it's a very speculative market right now, and you can see that from a wide variety of things. So the number of SPACs that have come to market, how hot the IPO market is with stocks jumping 100% first day, the return of day trading, cyclical recovery stocks that are at higher than pre-pandemic levels despite much lower earnings. It's just a bit of a buyer beware market where people are really very willing to capitalize the hopes and dreams of the future. And so that backdrop makes us a little skeptical going into even looking at the actual numbers, which Brian will talk about.
Well, just, looking at the numbers, Airbnb, they IPO'd and it was a strong IPO. Then the stock dropped a little bit down. I want to say it was, if I recall, about 140-ish. Now it's trading, went skyrocketing over $200 a share. And, overall market cap's pretty massive, over 100 billion. DraftKings, their shares, they've nearly quadrupled over the past year. Probably the best way to try to look at this is maybe more, since neither company is generating any earnings yet, is to maybe look at just a enterprise value to revenue. And if you look at, both of them are fairly similar. They're pretty sky high. I mean, Airbnb is trading around 25 times enterprise value divided by revenue, and DraftKings around 23. Now, they're forecasting for a lot of growth in both companies. And so based on that, if the price were to stay the same today, going out, 3 years from now, they're putting Airbnb at around a 15 multiple of revenue and DraftKings around 12 times. But, just to help you see, I mean, these are pretty astronomical numbers, because first off, the growth has to happen in order for that to become true. And even after that becomes true, recognize how high and elevated those numbers are. So a business like Facebook, they're trading at about 6 times revenue. But keep in mind, they have a 50% operating margin right now, whereas these other two companies have no profits. Booking, another platform in the travel sector, when you're kind of looking at Airbnb, Booking's at 10 times revenue right now, which is depressed because of the COVID environment. And they're forecasting 3 years out from now to be at about 5.6. So that means Booking is forecasted to be about a third of the valuation of Airbnb right now. But their profit margins are 35% or perhaps greater. And so again, a profitable company, growing industry, network effects. And then another one, I mentioned DraftKings being similar to exchanges. If you look at a very profitable exchange, Chicago Mercantile Exchange, there are 70% EBITDA margins. So they should trade at a very high enterprise value to revenue, and they're trading at 16 times now and 14 times 3 years out from now. So you might look at that and say, oh, well, DraftKings is at 12 versus Chicago Mercantile Exchange forecasted to be at 14. It looks more expensive. But keep in mind that Chicago Mercantile Exchange, 70% operating margins. I don't think that's what we're thinking is the future of DraftKings. So I guess the point is valuation's very high and elevated. That's not to say that these could never work out. For people who are investing in them, I hope that it does work out for them. But the challenge here is that you have to have the growth pan out. The network effects have to pan out. And if it doesn't, then it really does become a lookout below. And for us personally, we'd rather not try to speculate, will it work out? We'd much prefer to be invested where we see that the cash flow is already there, where the profitability is already there, the pricing power is already there. For us to want to speculate in these sorts of things, we'd want to see a much cheaper valuation that could give us some comfort that if it doesn't work out well, the downside's not so catastrophic.
Well, this has been great. Thank you so much for your comments. And everyone, thanks for watching. Check out our other videos and make a comment. What do you think about Airbnb and DraftKings? And we'll see you next time.